Hey guys, Chart Stopper's back with another video. In this channel we take a look at different stocks and map out their key support and resistance areas on the chart. It's important to know these areas before buying any stock, and it's also important to know what kind of a trend a stock is in before you buy into it. Support and resistance is one of the most important things you should know about a stock before you either buy or sell. Also, if you're doing any day trading, swing trading, or options, you're definitely going to want to get familiar with support and resistance. Just to let you guys know, I'm not a financial expert. These videos are for educational purposes only, but I am here to point out key factors on the charts which do impact the price action of a stock. Also, I provided a link in the description for Webull. We are using their software today, so you could get familiar with it if you do want to start an account. You can use my link I provided. I think they're doing a promotion to where you get 4 free stocks now, so you're going to want to check that out. I also provided a link for Robinhood if you would like to use that platform. You can deposit $100 and get 1 free stock with them. Either way, you get free stock by depositing $100. Okay, so just to let you guys know, we will be doing 3 videos per week on 3 different stocks. So if you like this kind of stuff, or if you have a recommendation, leave a comment below and subscribe to the channel. Also, you're going to want to hit the notification button to know when every new video comes out so you don't miss any. Okay, so with nothing more, let's get into the video here. And today we're taking a look at Disney. It's currently trading at $172.78. It's up a little under 1% today. And let's see here. We're going to be mapping out the resistance and support on this one. So let's get into it here. Let me get my line going. And as always, we're going to start at the bottom here. Usually I like to start right in this area here where this bottom low is. This is right around the time when COVID happened, and basically any stock you look at, you're going to see this big dip here. That's because the big panic when COVID hit, everybody sold off their stock and everything went down and dropped to these lows here. So that's where I like to start for these stock chart analysis, and I like to go up from there. So we're just going to drop our line in down here. I'm going to say $90 would be a good low for this one, and we'll just work our way up here. So I'm going to grab another line, and let's try to find some resistance off that $90 support at the bottom. And it looks like I see some resistance right around this area right in here. It looks like around $110 is where I'm seeing that. So I'm just going to drop my line in. Let me just move that up a little bit. Let's see here. How can I do that? Let me see if I can move that up. Get it to 110 here. And you see the little resistance here. It kind of traded sideways for a little bit, and then it finally broke through that 110 and made its way up here. And we're gonna find our new resistance to this 110 support. So let me go grab another line, and it looks like it came up here to around this area where it hit some resistance at around the 130 mark. So I'm just going to drop a line in there where it had a little trouble breaking through this point. See, it kind of hit up here and then bounced down, came up, and then came down a little bit. So it went a little sideways for this period of time in here. So I'd say that's pretty good resistance until it finally broke through on a strong earnings report in November of 2020. It finally broke that 130. And let's see, it came up to around the 150 mark where it had a little bit of trouble here breaking through this mark. So I'm going to drop a line here. As you could see back here, before COVID happened, this was also resistance. it had trouble breaking this area in here, and it ended up trading sideways before it eventually dropped down when COVID happened. So you could also see that that was former resistance, and it is here. Okay, so we're going to grab another line, and we're going to go move up on our chart here as it eventually broke through this 150 mark. And you see this gap right here. This is something that, you know, it always scares me when you see a gap like this on a chart, because these gaps, they do have a tendency to go back and fill themselves in on the chart. So you have to take a look at that and be aware that that's there, because usually those do come back and eventually do fill in, you know, with the price action. So you got to keep that in the back of your mind when you do see that on a chart, just to let you guys know. So it goes up to this all-time high here. So we're just going to mark out our all-time high up here. It looks like it's going to be around 183. So we'll just go up to 185 and say that's our high. The top resistance for this one, 185. Okay, so we're going to try to find support off our 185 resistance up here. And that should finish off our chart here. So let's see here. It looks like if I come down in this area here, we have some support for that. So I'm thinking 170 should do it. As you can see right here, it comes down and it looks like it's going to hit that 170 mark, and it should flatten out or go higher. But remember, you do have this right here, this gap right here. So you got to be aware of that if you're looking at this chart, that they do have a tendency to fill the gap in. So for the price prediction, looking at that gap right there, that does scare me. For this stock base, it's all going to come down to earnings for this one this year. You know, if they have a strong earnings, I think it should be able to bust through the 200 mark. I think the reason this gap was here was because they announced something about their streaming service, that they were going to try to contend with Netflix on that, or Hulu. That's what caused this gap right here and drove the price way higher right there. So if they do have a strong earnings, I think it should drive it even farther up, possibly past the 200 mark, you know, all the way up there. But because of COVID and everything this year, their theme parks shut down and their hotels and everything. So this stock, it could go one of two ways, you know. With everything that's happening, you never know what's going to happen. They have their streaming service on one hand and then their theme parks on the other. So you don't really know what you're going to get when it comes to earnings based upon that. So if they do, you know, if earnings are taken the wrong way, it could go down here and eventually fill in this gap here before the reopening happens, and then it could turn around and head up towards the 200 mark. So that's my price prediction on that one. I think it's all going to come down to the earnings on this. So we'll see what happens with this stock on earnings. Okay, so that's the video. Hope you guys liked it. Be sure to hit the subscribe button if you want to see more videos like this on different stocks. I want to thank you guys for watching, and we'll see you next time on Chart Stoppers.